More people are receiving tax notices about 2021 than in years past. Most of them shouldn't even be receiving these tax notices. I'll explain why, that more coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. Well, I hope you still do. I mean, tax notices are one of the worst financial events in your life. People hate them, okay? When you look at all 6 areas of your financial life, tax planning is one of them. If you're working with a financial advisor that's avoiding tax planning, you've got the wrong advisor. They've got to be helping you with tax planning and collaborating with your CPA. If they're not, there's just lots of opportunities missed. Tax planning is really identifying which tax opportunities you should implement to avoid, to pay the least amount of tax over your lifetime. But then the second purpose of tax planning is to avoid surprises. And there's no tax surprise worse than getting a tax notice. Here's the thing. From 2021, there's more tax surprises that people have experienced. And sadly, there's a lot more tax notices that people have been getting this year for their 2021 tax return. Now, why is that? Why are people getting more tax notices, more tax nastygrams this year than in years past? Well, I'm going to argue it still has to do with some sort of staffing level and disorganization among the IRS and even at your state level. But the primary reason that we're seeing, both at the federal level but also at the state level, our headquarters is in northern Indiana. We've got offices in Michigan as well. But most of these tax notices, these errant tax notices, are resulting from the IRS miscalculating how much you've paid in your taxes. Oftentimes, this is coming from, and we are seeing this a lot at the state level in Indiana, where you might have paid 4 estimates throughout the year, and we've got that reported. You've got that reported on your tax return. Okay, here's how much income I had. Here's all my deductions. Here's my credits. Okay, here's my tax. Here's how much I had withheld for taxes, and here's how much I paid in for estimates. And when you do that, you might have looked at and said, yep, I've paid 4 tax estimates this year, and you're getting a tax notice that says, well, you only paid 2 estimates, and therefore you owe all of this money. They're not, many times we're seeing this where the IRS is just not factoring in. They're not calculating, they're not counting some of the payments that you actually already made. Obviously, this is a huge problem and it's very alarming. People, again, I hate getting tax notices in the mail. I think I've gotten a handful in my life. They always make me squirm when I see that envelope, okay? And that's one other thing I would tell you. Tax notices, tax problems, they're always going to start with a letter in the mail. They're not going to text you. They're not going to call you. Those are scams. Now, if you've been working with an IRS agent or the IRS on an ongoing issue, then they may call, then they may email, whatever. You've talked to them about that. But your first tax notice or notices are going to come by mail. When you get that in the mail, the very first thing that I would tell you to do is open it, take a look, whatever, but don't just immediately say, oh my goodness, they say I owe, $3,000. All right, let me just get rid of this. Okay, I'll write a check for $3,000. I assume you won't do that. But you've got to look and see, well, where's the discrepancy? Usually you flip that over and you're going to see a little bit of breakdown of here's what you showed on your tax return, here's what we're showing. And you're going to want to look, again, a lot of the errant tax notices that we're seeing break down onto that payment line. Either your employer didn't withhold correctly and they didn't issue the correct W-2, or most often the IRS is just missing some of your estimated payments. So you're going to want to look there and see, well, is that the issue? More often than that, if you get a tax notice, this is one of the reasons why you should be working with a CPA firm, and specifically a financial advisor, CFP, who's collaborating with your CPA firm, okay? Because they should have adequate records and should be able to say, oh, nope, yep, I see that you paid this estimate at this date, this estimate this date, this estimate at this date, and therefore we'll just send a response and show some proof that you paid these estimates, and hopefully the IRS will correct this, okay? So that's the thing. Make sure you're working with a CPA so you get a tax notice. They're your first call. They're going to want a copy of that notice. Second, if you are paying tax estimates, make sure you have a copy of that. Make sure you have a copy. If it's a check, make sure you have a picture or a copy of the front and the back of the check, the date at which you mailed it in. If you're making your payments online, we've even seen this, the IRS get this messed up. How does that happen? It's automatic, okay? But make sure you have a receipt, either the email that you receive, or I do a screenshot as well when I make my tax estimated payments. You should be able to, if you've ever set up a login to the IRS, you should be able to see your payments that you've made there. But most people, as of right now, still don't have an online account set up with the IRS. I'd encourage you to consider doing that. But first and foremost, if you're getting a notice, we're seeing lots of errant notices because the IRS is not calculating all of your estimated payments. So work with your CFP and your CPA and make sure you've got copies of the estimated payments that you've sent in. Further than that, what are some other reasons you might get a wrong tax notice? And therefore, it'll raise your blood pressure when you open it and you'll get very worried, but in effect, it won't be, there isn't an actual fault on your own. There's a fault with the IRS. And the second most common reason, or another very common reason that we see people get incorrect tax notices, is for 1099-Bs or brokerage accounts, investment accounts, where maybe there was some capital gain, you sold something, or and you never reported the basis, or you have the basis, but your investment company never reported the basis for you. Well, here's what the IRS is going to assume. Well, you had no basis. Therefore, maybe you sold Apple stock for $100,000. If your company, if Fidelity or TD Ameritrade, whatever, didn't put in your actual basis, then the IRS is going to assume, well, all 100,000 of that is taxable. And if they didn't put in your basis, likely they don't have your the date you acquired it, so they're going to assume all 100,000 of that is not only taxable, but it is short-term capital gains. Therefore, you're going to get a nasty gram, a tax notice saying you owe all this tax, when in fact you just need to say, oh, I sold that for $100,000, I bought it for $100,000, or I bought it for 101 or 110 or whatever it is. Therefore, there is no capital gain. There's actually break even or a loss. And then the final thing that we're seeing lots of errors with the IRS on, and not a lot of these have made their way into notices per se, but they're delaying some refunds, and that is the IRS not accurately accounting for economic impact payments or stimulus payments you received or advanced child tax credits. The IRS, their system has been flawed with this, and if your records are flawed as far as, well, I actually not sure if I got that, or I never went and double checked, it's possible you're going to have some challenges with the IRS, may end up getting a notice as well, simply because of these advanced payments, these advanced tax payments that were sent out, which was the stimulus payment and the child tax credit last year. So the big idea is no one wants to open their mail and see a tax notice, but work with your certified financial planner, work with your CPA, double check and make sure that tax notice is actually accurate. Talking to one of our CPAs here, he's going to be on the Wise Money Show here shortly, Ryan Fair, he said the majority of tax notices that he sees are actually in error by the IRS, and you simply need to prove, nope, this is what actually, here's what actually happened, or here's the proof for what I put on my return. So first step is work with your CFP and your CPA. Second, double check to make sure they've got cost basis and that you've accounted correctly for any economic impact or advanced child tax credit payments that you've received. Work with your CFP and your CPA on that if you don't have a CFP on your team, and more importantly, if they're not collaborating with your CPA, you can contact one on my team. Find us online, Korhorn.com, that's Korhorn with K, wisemoneyshow.com, you can find us there as well, or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.